Welcome to Impact TV, Impact Venture Capital's corporate venture video series in collaboration with Kaufman Fellows. I'm Patrick Bumpus on the investment team at Impact Venture Capital. I'm joined by Kaufman Fellow co-chair Alessandro Santo. And today we are thrilled, after a year of pestering him, to finally get Joe Robinson, president of Corp Dev and Ventures at iHeartMedia. Being a New York born and raised guy, first major question is Yankees or Mets?
Oh, Yankees for sure.
Okay. Because I had a really tough question if you're going to say Mets. I was going to say, do you know how they got their color palette?
No, Yankees always have been.
All right. All right. And then, so, iHeartMedia is famous for putting on these great music festivals in the past. I'm not sure if they're still doing it, but have you ever been to them? And better, more important, did you get the best seats in the house?
I did. Interestingly enough, I've been going to iHeart concerts before I was ever at iHeart. And I was taking my kids to iHeart concerts before I was ever at iHeart or even thought about going there. So I've been a long time fan of all of iHeart's events.
Yeah, they were pretty cool.
Pretty cool. Yeah, but we do about 20 events a year, and I probably go to most of them.
Oh, that's a nice perk.
Yeah.
So, hey, diving in a little bit, you've worked with a myriad of media companies in the past. You worked at a traditional venture capital firm. I think that might have been yours. And then you now are, in the corporate venture world. Can you tell us a little bit about your journey to iHeartMedia and how those past experiences really helped, form the investor you are today?
Sure. I've been investing in companies for 25 plus years, really starting with the beginning of the internet boom, starting in 1994, 95, and then going on to work with many of them or work for them or operate them or be participating in their growth in terms of building their sales teams or building out different systems and processes that these companies may need over time. And throughout that journey, I actually was able to start my own fund, which did quite well, and then ended up working with Bob Pittman, who is the CEO of iHeartMedia Inc. And we were working together on a variety of different projects together. And he sort of saw what I was doing on my own and said, would I like to come and basically do the same thing here? And we came up with a notion around that, and that's how I got here.
So starting in as a traditional VC probably gave you a bit of an advantage, moving into this position. You see a lot of people go from CVC to traditional VC. Did you feel like you came in with a sharper sword than somebody working backwards?
Sure. I mean, I definitely know how the game is played at the traditional venture. In the traditional venture world, I know a lot about how that space works, and I know all the nuances and detail that is required to run a sort of traditional fund. The thesis that we used in coming in here was that iHeart has two types of currency, right? It has its capital that it can deploy, but it also has its media to the tune of which iHeart's customers purchase approximately $4 billion worth of cash media from the company annually. So there are a lot of people who value our media, and therefore there are companies that can utilize our media. And so we came up with the notion of, hey, what would happen if you utilized them together to help the companies we work with, which we'll get into more.
Right. So why don't we back up a little bit, because iHeartMedia has a really interesting background. So tell me about how the company came to be, and then why they decided to get into the CVC game.
Sure. iHeart, formerly known as Clear Channel, what is an amalgamation of about 850 plus stations around the United States that were part of a large roll up, pre-2000, right? And so The idea was that that with scale, you would be able to drive a lot of margin out of that business. It was one of the last great roll-ups that there were. And so as the company was transitioning into more of a sort of consolidated media company, the notion was, hey, what would happen if you took all of those stations and created a brand with that called iHeart, and then created a way of distributing iHeart content, which was primarily radio, but it spans everything from video to concerts and other things like that across digital mediums. And then we're to grow that into the digital environment that we are in today. So the history was traditional radio in the form of an LBO, but it had turned into a way of taking all of the different assets that we have and consolidating them and then figuring out how to distribute them across the world in different ways.
Got it. Did you guys stay in the outdoor game, or did you shed that portion?
No, we did a consolidation and change of our debt structure several years ago, and in the process of that, we shed the outdoor business and retained the audio business. In fact, we're the largest audio distributor on the planet.
Wow. And what was the catalyst of starting a CVC at iHeartMedia?
Yeah, kind of going to where I was headed before, which is that when I was looking at the company and when I was offered to come and work with Bob, who's terrific and a great CEO, I started to look at the different assets that the company had, right? So in CVC and in traditional media, even in my traditional media days, it was always, it's always about how can you add value to the companies that you invest in, and some of the great VCs, take a lot of time to work with their VC partners and investments closely. Other VCs are, it's strictly a financial investment and they're looking at it that way. So because we had all of these media assets, it dawned on me that there's a value to those. And was there a way to leverage the media that we have, both with our existing customers that may need some help and with new customers that weren't familiar with our media, in order to help them grow? And so we started to experiment with that, and it worked quite well, as we found, with the right types of partners and right types of companies at the right stage. And it worked well. And we also developed a technique of doing it in a way that was quite favorable for the company as well as for its investors.
I can imagine that would create quite an advantage for the companies you invest in. I mean, make you a very, popular target list as an investor because of the tools that you have,
100%.
Yeah.
And also we do it in a way that is that other venture partners find attractive, and that founders find attractive. So we when we deploy capital and when we deploy our media, we do it in such a way that that it doesn't hit the company. Obviously, if it hit the company in that moment, it would be rather difficult on the cap table. So we do it in a way that it spreads it out across the cap table in a very soft way, and allows for the company to grow its valuation before it hits the cap table, which is a nice structure, and that is received quite well by the market.
Yeah, this dovetails nicely to my next question for you. As from technology to podcasts and music and content consumer brands, you've got like this really exciting investment mandate, it seems. Can you tell us about how you are sourcing companies and what areas are really, exciting to you and iHeartMedia right now?
Sure. We have a team. Our team consists of 7 people that is actively out in the world looking for deals. We also pick categories that we think that would work very well within our structure, depending on what's happening. So several years ago, that might have been fintech or insurance, or pets or some consumer goods or things like that are quite spot on. That's sort of on the consumer side. And then on the technology and sort of internal side, we'll look at companies that we think that are audio focused that can help us to grow our audiences, media companies that will help us to expand our reach, that will help us to sell our products more conveniently. So we'll look at those types of deals as well. In all honesty, the best way that we have found to find companies is to connect with the venture community. The venture community very quickly understands how our model works, and also getting an introduction from somebody who gets that and can introduce us to companies that they like is a much faster and much more elegant way of finding our resourcing.
Interesting. Yeah. One of the things that we do differently is that we partner with corporates early. And we, try to find, one of the reasons why we do this show is to talk to folks like you and see what you're looking for, and maybe introduce deals that might be too early for you, but it's something you may be interested in, and say, yeah, there's a grain of interest there. Why don't we see what the company can do? We de-risk it and get it to a Series A, hopefully, and then we've got less syndication risk for A investors on our end. But how do you deal with companies that are interesting to you but are too early?
We've had a lot of that in our early days. We've been doing this for quite some time now. In our early days, we would take on young companies. And what we found is that a lot of them are not quite ready for media at scale, right? They haven't learned where their markers are or where their KPIs are. And so we will stay close with those companies and help them as they go into their follow-on rounds. Occasionally, there's a company that has an impact on our sort of technology roadmap. And maybe we'll get one or two a year that we think that is just, they're out in front. We like what they're doing. And we'll make an investment predicated on what we think that it means for audio and what it means for audiences into the future. And so we do a small amount of that. I would say we prefer to wait till late A, Series B, and track with those companies as they need it or test with them. And we do 2 or 3 events a year for young companies to come in, and we engage with them on a regular basis. And the good part about that is we actually do a concert for them, and
really,
yeah, it's quite fun.
Man, we got to up our game. We're not doing that. So, obviously AI is all the rage right now. We are AI investors, but it's just reached a tremendous fever pitch out there. How much is artificial intelligence now playing a role in your decision making when it comes to new investments? And to the point you just made, do you worry about AI companies, even if they're really early, getting snatched up ahead of time before you even get to the late A chance to invest in them? Is there a huge focus on AI right now at iHeartMedia?
Sure. I think we need, AI spans a lot, a wide range of different things. And so we often get asked the question about AI and music. We are very supportive of our partners and our label partners relative to AI. So we believe that the human experience is super important, and that as a general rule, we are going to stay in that lane relative to how we express our audio. We keep an eye on the output from a content point of view, but it's super important that we support artists and that we support our partners, and we take that position quite seriously. But when it comes to efficiency, driving efficiencies and looking at new ways to express our web presence and to be picked up, an interesting one, by the way, is, let's say for our podcasts, can podcasting information, which is audio, be consolidated inside a large language model, right?
Mhm.
So if you think about this for a moment, if you look at the top of your Google search or your Bing search, there's your normal search, and then there's shopping, and then there's video, and then there's news. And the one thing that's missing from all of that is audio. Why is audio not a search item, right? And the answer is we probably produce more content, on a net basis than any other form of media that's out there, because the human voice is being, iHeart, as well as all of the people who are in our industry, as well as all the podcasters, represent an enormous amount of content that's created, both in terms of its geography, its category, its local linguistics, you name it, it does it. So we're very interested in participating in that. And so we've been looking at that quite a bit, both in terms of participation in the large language models, transcription, and searchability within those models. Super interesting relative to what we're doing, and making sure that audio remains part of the broader ecosystem as that continues to develop.
Yeah, I see a huge opportunity for new music discovery. The AI playing a great role there. But I loved your answer about supporting the artists. I think it's foolhardy for people to say that it will replace, popular music today, because my opinion, people love the backstory, right? They fall in love with not just the artist's music, but the artists themselves. They want that story. They want somebody to connect with. And, an algorithm and machine learning is not going to deliver that same warm, fuzzy feeling.
It's true. The nature of audio in general, which is, if you think about it, audio is in most people's ears, a considerable portion of your day. Like, you wear headphones and you're in your car, and so audio is around whatever format you consume it in, but you consume a lot of it. And so we often, one of our core premises is that, audio builds companionship. It's about that level of companionship, and that the same thing goes for music. And we would never want to lose touch with that. It's a very important piece of what we do.
Yeah, I was surprised, and I think podcast is a great example of that. I was surprised, and I continue to be surprised, the acceleration of popularity with podcasts. I mean, I know I probably have 4 or 5 open on my desktop at any given time. It's information on demand told by a real person who's experienced it, which is this very fulfilling, and I think deepens the way you retain it, right? It just sticks better than reading an article, for me anyway.
For sure. For sure. Listen, it's audio on demand, and it's what we have found, which is quite interesting, is that if you listen to a podcast on a regular basis, much like with radio, you start to feel like that person as a friend, right?
Yep.
Like, you become accustomed to their voice, and as if you could talk to them as if you know them, and that's a really interesting experience, a very human thing.
Yeah, absolutely. So when you're considering an investment, how important is it for you or your team to get business unit buy-in for that investment? Or can you act autonomously, or do you need to get the back office team to, help lead the charge?
It depends. If it's a strategic play, where we see, where there's a snap into the company, we would want a significant amount of buy-in. We would want to run that through different business units to see how that would snap on and work well, either with an MVP, or as a customer, or with an integration like that. We would go through that process for sure. If it's a good play and we simply like the company, we create a deal memo, which will then be vetted by our senior management, and it's validated, predicated on the work that we do, and we do it for the upside.
Very good. So you're thinking strategic, but you're also thinking returns as well.
We have both. I mean, that's one of the reasons why in my title it's corporate development and ventures. So I would say in at least about probably somewhere around 10, 12 companies over the years, we've actually acquired these companies, some of them. Where the relationship has gone well, we've made an investment, we like it, it becomes integrated into the broader company on a lot of levels, and where it makes sense for us to make an acquisition. And so it's a really nice way for us to learn with our partners, to develop with our partners, and then at a certain point say, hey, this makes a lot of sense. Would you like to become part of the iHeart family?
Great. Now, this next question, you touched on it briefly, but if we go a little bit deeper, that'd be great. So how are you collaborating and co-investing with VC funds? Do you have a bench that you typically work with, people who know you guys inside and out, know what you're looking for, or is it kind of all over the board?
It definitely started out as all over the board. Over the years, we've built a lot of relationships, and we have a very defined strategy about working with partners these days. In fact, we had a meeting today on this to ensure that that we're always in touch with the industry. This is one of the reasons why we do these events, to make sure that our partners that we have opportunities to communicate with our partners. We also want to make sure that it's a two-way relationship, right? So we don't want to be calling up partners to say, hey, what have you got for us today? And not be able to express some of the things that we're seeing in the marketplace. So we want to make sure that we're good partners with the VC community. But again, we try to make it fun, right? So to some of those concerts and events that I was talking to you about, we will invite our VC partners and relationships to join us at those. That's a good time to meet in person, share ideas. And then every now and then we'll come up with a thesis for different companies that we like, or categories that we think will do well with us. And we'll then express that thesis to our partners and see if there's a fit somewhere.
Do you guys ever seed VC funds and task them to look for specific things for you?
Rarely. I think that it's super hard given the nature of the deals that we construct for that to happen. We have to find the right company at the right time that understands the medium and understands what we're doing. And so unlike, let's say, just if we're deploying just capital, that relationship might be an option, but it's really not as much relative to what we're doing.
Got it. And do you guys have a dedicated fund, or are you investing off the balance sheet?
We invest off the balance sheet, but we have strict models that we work with.
Right. Do you find it, some of the other CVCs that we've talked to, when they're off the balance sheet, they find infusing more capital down the road to kind of double down on their investment is more difficult to convince the CFO of versus the first investment, the initial investment. Do you have that same type of friction, or do you guys have a follow-on strategy?
There is a pretty strict protocol that we follow relative to follow-on investments, right? So if we see success in the original premise and we can positively prove that, we will notionally do another round. And so it's not uncommon for us to do that, but just like any ratio of portfolio analysis, like any in portfolio performance, there are the best that will get that treatment and others that we will not do that with.
Okay, cool. Switching gears a little bit, on your website, I see that ESG plays a big role in the company's culture, but I wonder if that carries over into your decision-making in investments, if you're considering ESG when you look at these companies.
Sure, we would. I mean, we got to remember, we reach 270 million people monthly through all of our different mediums, right? So like that's basically the United States.
Yeah.
It's super important that we stay close to local communities, that we are attentive to what's going on in the United States and what's happening culturally, and that applies to ESG, but it also applies to emergency services during storms. It applies to helping people out, as things are happening around the country. That's a big notion as to what radio does and how it can be impactful, as well as podcasting. ESG is relevant. We have made some ESG investments. I think that the ones that do best are the ones that have a really sort of straightforward plan and can figure out how to leverage the size of our megaphone to help them where they're at that moment in time.
Yeah. So, as early stage investors at Impact, when we're looking at companies, we really have to overweight the quality of the team. That's, a lot of times they're pre-revenue, they're product market fit, they're pre-everything in some cases. And so we're really, going off of the quality of the team. You guys come in a little bit later. So for those young entrepreneurs out there who are building companies that would be interested in, or building products that might be interesting to iHeartMedia, what qualities and character traits, skills, industry experience, coachability, what are you looking for in founders and the companies?
I think that's a terrific question. I think it's probably the most important question given what we all do. Having some experience is a big deal, right? And bringing someone onto your team that has some experience is a big deal. We all see lots of amazing ideas. We all see lots of great initial starts, but the ability to actually affect meaningful change onto the company and growth takes skill sets that develop over time. Whether that's I personally come from building sales teams, but whether that's product development and product adaptation, audience growth, growing sales, at the retail level, whatever that might be, those are skills that are out there that people have done with repetition that we look for in the companies that we invest in. And so we take a lot of time to ensure that that's what we do. And I would advise any company to ensure that certainly your advisor should have those skill sets. And if possible, one of your team members should come from that space, especially if you're got a great idea, but you're entering into a market that you don't know, right? As we all know, those relationships in that market are everything.
Yeah.
And so, having somebody who has those relationships and can actually deliver on that is a big part of success.
Fantastic. Now, you touched on round size a bit, but could you go a little bit deeper on your investment thesis, ticket size, all that?
Sure. I mean, we will measure the size relative to the scale of the business. So, we've written checks that are in the mid seven figures, right? And we've written checks for the mid six figures, so that's in terms of very much dependent on where the company is. It's also dependent on how well they use their media, right? So when we first started this, we would have companies that would come in and take a tremendous amount of media, right, and not know how to deploy it, and therefore they would use it inefficiently, and then they would need more cash in order to keep the ball rolling. The whole point of taking the media is that it should reduce your burn.
Yeah.
Right. So because that's going to come directly off your marketing line, as we all know, headcount and marketing are the two biggest elements of most companies that you're going to deal with. And if you could take one of those down dramatically, then you should have a longer runway to achieve what you need to achieve. So that trait and that understanding helps us to size the deal, of course, with all of the other features that you would expect.
Now, is there an ownership percentage that you guys target?
Um, Not specifically. We typically end up with somewhere between 10 and 15% of the company.
Mhm. Great. And what is beyond iHeartMedia acquiring the company? What is your exit strategy with companies?
Ultimately, our exit strategy is twofold. So one is that I'd say, and this is indicative of the industry overall, is that we find ourselves in companies that will be acquired right quickly, that will scale up and then be acquired. And that's, by the way, another benefit of using media, because your brand will be out much more visible in that way, as opposed to, you know, having to go around and shop it without people knowing who you are. But what I would say is that we will. I wouldn't say that we specifically look for companies that we think that will have an IPO or exit, or that would be, that would be standalone. That's not a prerequisite of what we're doing. I'd say the bulk of the companies that we would invest in are typically going to be acquired ultimately.
So you wouldn't shave off, like you get a certain multiple, take 30% off the table and then let the rest ride?
If that was doable, I mean, we look at like, I think that is more a factor of how the company is doing.
Yeah.
Listen, yeah, we will always look to limit risk,
Mhm.
and we're not a swing for the fences type of shop, and we'll look to limit risk, and we'll look to parse our investment intelligently, right? There's no we're not taking $50,000 or $100,000 bets on hundreds of companies.
Right. Now, 5-year time horizon, what's got you the most excited, like to invest in coming up?
It's interesting. There was a moment there when we were doing a lot of investing in podcasting.
Mhm.
Right, podcasting, for all the obvious reasons, was really big. I think one of our most successful deals was when we made investment in and ultimately acquired How Stuff Works, or Stuff Media, when they have one of the largest podcasts in the world with stuff, How Stuff Works, and stuff they didn't teach you in history class, etc. And then we did several acquisitions in the space that was really fun and exciting, because we knew exactly what to do with those assets. Right, we knew exactly how to deploy them. We knew how to test for them. We knew what was going to work and what wasn't going to work. And when you look at some of the other players that are in our space, and you guys can probably think of them right off the top of your head, we've seen much more success than some of our competitors in the space. And that just comes from our history and our experience with the medium. That was a lot of fun. That was a lot of fun.
Excellent. All right, home stretch here. Last 2 questions, rapid fire. So, as a professional investor, how do you prepare yourself for excellence on a daily basis? Are there any routines in the morning or at night, blogs, books that you keep up with?
On a personal basis, yeah, that's interesting. I'm a heavy reader. I'm a very, very heavy reader, and that happens at all hours of the day and night. So I would say to you, I come through at least 2 or 3 hours worth of relevant content on any given day. And then I always make time to at least once or twice a day reach out to somebody from within the industry, just to have a check-in call, right?
Mhm.
We are an industry of relationships. People don't necessarily realize that as you think about the venture world. Especially corporate venturing, we are an industry of relationships, and so managing those relationships is really, really important. So those 2 things, I think, are what's on my mind, and I will often take notes and remind myself to reach out to people that I've met, over the years, and just say hi.
Fantastic. I'm bummed you're not going to be in Monterey. I was looking forward to connecting with you
Yeah,
again.
but my team will be there. My team will be there, and it's time for them to get to know the industry. As I say to those guys, I will have failed if you guys do not know your industry backwards and forwards.
Well, I'll look for them and introduce myself. Last question. What's the best piece of advice someone's ever given you?
It's corny, but never give up. never, ever give up. It's never over until it's over, and you will, and if you get knocked down, you got to get right back up again. It's as old as time, but it's as true as it can be.
Totally agree. Hey, on behalf of Impact Venture Capital and the Kaufman Fellows, thank you so much for spending some time with us today. It was a kick, and it's great learning more about you and iHeartMedia. It's actually a very, very interesting approach you guys have, and an unfair advantage that you are able to give your companies.
Well, I look forward to connecting with you guys, and thank you for the call today, and we'll catch up soon.